Now we are going to start with AS-2, that is valuation of inventory. Just wait a second. Okay. AS-2 valuation of inventories. What does inventories means? Simply stock. The opening stock and the closing stock are known as inventories. The other name for stock is inventories. So firstly we'll start with para 1. This is a very small AS, so just don't worry, just chill. AS1. AS1 says this standard, that is accounting standard, does not deals with the following. Just wait a second. 1. Construction contract. Second, WIP of service provider, that is work in progress of service provider. Third, shares, debentures and other financial instruments held as stock in trade. Fourth, producer of inventories, that is livestock. You have come across word livestock earlier. Livestock, mineral oil, then crops, etc. It should be recorded at NRV only if negligible risk of failure to sale. Okay, so we'll read para 1. Para 1, in this standard, which all thing does not comes. The the AS2 valuation of inventories does not deal with the following thing. Construction contract. For construction contract we have a specific standard, so don't worry, it won't be covered in valuation of inventory. Construction contract has a different AS. WIP of service provider, it does not have a separate AS, but WIP of service provider will not be covered in valuation of inventory. Shares, debentures and other financial instrument held as stock in trade, even though this financial instruments are held as stock in trade, it won't be valued as per valuation of inventory. AS2, producer of inventories, that is livestock, mineral oil, crops, etc. It will not be dealt with AS2 valuation of inventories. It should be recorded at net realizable value. NRV stands for net realizable value. I'll write it over here. NRV is equal to net realizable value. Net realizable value only if negligible risk of failure to sale. Okay, that means if there is a negligible risk of failure of sale, then only this all stock, that is livestock, mineral oil and crops, will be recorded at net realizable value. So this was an informative one. It won't be asked in the exam, but you should be knowing what AS2 deals and what AS2 does not deals with. That's why the informative part I have given. You have to write it, but okay, because it is for your better understanding. Please don't copy it right now. Para 3, what is inventories? It is given in para 3. What is inventories? Inventories are assets which are a held for sale in ordinary course of business. In ordinary course of business, that is finished goods. FG stands for finished goods. I'll write it over here. Finished goods. B, in the process of production for such sale. Third, inventories are assets which are in the form of material to be consumed in the production process or for rendering services. So what are inventories? It is given here. There is one more part D, machine spare parts that we call as loose tools, that we used to study earlier in the final accounts. Loose tools, they form part of inventories only if they are used regularly and not for a specific asset. Okay, we'll read para 3. What is inventories? Inventories are assets which are held for sales in ordinary course of business, that is finished good, in the process of production for such sales. Inventories are assets which are in the process of production for such sale. Inventories are assets which are in the form of material to be consumed in the production process or for rendering services. Inventories are assets which are machine spare parts, loose tools. They form part of inventories only if they are used regularly and not for specific asset. This you have been already knowing, so there is nothing new. I'm not throwing any light on this. All this is not all new for you. This you are studying from 11th standard, so there is nothing new in this. Just where it is told in AS-2 that this all are not covered under AS-2 valuation of inventories, and what are inventories, it is told in AS-2 over here. Okay, generally we used to ask our teachers where it is told why only machine spare parts, loose tools are to be taken in inventories, that is stock. So it is given in AS2. This is a guideline, as I already told you all. So firstly, please pause the video and copy AS2 para 1. I hope you all have copied this para 1. Please copy para 3. Now all small paras will be coming. Only 4 paras remaining in this AS2, and which whatever paras I am writing now are henceforth very important. This you will be needing here and then when you are solving AS2 sums, because this is very important and very small also. It will be covered in one page, I hope. Para 5. This you will all be knowing. Inventories are valued at cost or market value, that call here as NRV, net realizable value, whichever is lower. This we are studying from the very 11th standard, from when we used to solve the final account sum, in which there was a first adjustment, closing stock adjustment. We used to ask our teachers where it is written inventories are to be valued at cost or market value. It is written in AS2 valuation of inventories that stock are to be, closing stock are to be valued at cost or NRV, that is market value, whichever is lower. So this was a small para, nothing new in this. Now para 12. Interest and borrowing cost are usually considered as not related to bring the inventories to their present location and are therefore usually not included in the cost of inventories. So this was an important para. You will be facing sums regarding para 12 in the practice manual. That time you will be very glad that you have para 12. Just write this para 12 and give an explanation as practice manual has given. Writing para 12 will help you to gain good marks. Now we'll move on to para 13. Para 13. It is also similarly in the same line. Cost of the inventory. What this para means, simply first let me explain you. I thought I'll explain both para 12 and para 13 together, but I'll give a baseline for para 12. Para 12 says that while fixing the cost of the inventories, which all expenses should we add in the cost of the product. So interest and borrowing cost should not be considered in the cost, because interest and borrowing costs are usually considered as not related to bring the inventories to their present location and are therefore usually not included in the cost of inventory. It is very simple, quite self-explanatory. When you will be solving sums related to AS-12, this will be very helpful. Para 13 says that cost of the inventories does not include following things. Which are the following things we will be seeing now? Cost of the inventories does not include the following. Following are: 1. Abnormal cost, abnormal loss, not cost. Abnormal cost and loss are one and the same. Cost means expenses, so abnormal loss. 2nd, storage cost. 3rd, office and administrative cost. Lastly, selling and distribution cost. In case of storage and office and administrative cost, it should be included if incurred to bring the inventories to the present use or location. So para 13 says this cost of the inventories does not include the following: abnormal loss, storage cost, office and administrative cost, selling and distribution cost. But this both cost will be taken into consideration, that is, will be included in the cost if incurred to bring the inventories to the present use or location. So this page is somewhat very important. So firstly, I want you all to please copy para 5.